So quickly, let's see what's happened in the Forex market this week. And as a rule, we'll go through everything on our watch list. We have about 10 currency pairs on this watch list. And as you all guys know, I'm Kojas from a swing trader. I like to give you guys the best analysis when it comes to Forex trading. And the outlook for the outlook that has been this week, and whether such setups or whether your setups did play out. Some of you guys were making predictions, and let's see whether they actually played out in this week, because this is Friday, and probably before the end of the video, we'll see whether we've got some setups for next week. So this is basically, guys, the outlook for next week. And without wasting so much time, let's go into the chart. So the first pair on my watch list is Euro USD. Now, Euro USD, earlier on in the week, I'm just only going to start from the weekly time frame. So earlier in the week, we have seen that Euro USD came to this point right about here and started to reject. So the previous week showed the rejection there. So in case you guys don't know what has happened for that particular level is what we call a pin bar. So this is a pin bar, and that particular week, which was last week, and as Euro ended, that pin bar signified that there is so much bearish rejection. There's so much bearish rejection there, and as a matter of fact, the week has now ended in a bearish candle for this week, as you can see right about here. So this is how to use your candlestick patterns when they are in confluences with major support and resistance levels. So you guys can see that all these beige colored zones here, the beige colored zones, like you can see right here, are the major zones. So they have been plotted on the major time frames, like the weekly. When you see a pin bar reacting, just like you've seen now, reacting off a major zone, best believe that it's going to hold. So most times people don't know how to, traders as a matter of fact don't know how to use candlesticks the right way. This is the right way to use candlesticks, so that once you see them, you know that this is what's about to happen. You interpret it accurately. So the last week actually showed that there was bearish rejection, and it's not surprising that this week has ended in in a rejection to the downside, as you can see here. Now, if we go over to the daily time frame, we'll see that although the overall bias for Euro USD is bullish, don't get it twisted, guys. The overall bias for USD is bullish, and we can see that we have a trend line right here. So we have a trend line right here. The overall direction is bullish. However, we're waiting for price to stay above that monthly zone or the weekly zone, as you can see there. Price didn't do that and has come to reject below it. Is it the best time to start taking trades on Euro USD? Absolutely not. Why? Because you shouldn't go against the overall trend. Even though you are having a rejection of a monthly zone, don't start clicking buy and sell buttons. So in this case, don't start clicking sell buttons, because it just means that you are trying to walk, against the monthly bias. You're trying to work against the flow of the river, and once that happens, you don't know exactly, I'm telling this from experience, you won't know exactly where to place your stops. You won't know exactly where to place your ideal take profits. So some traders will come here and look at this chart and say, okay, so since we have broken this trend line right about here, and I decide to want to take a trade, probably I'll start going to the 1 hour to take a trade. The next thing they'll think is that this is going to be the next zone, they should take their profits. But do not do that, because once you start taking trades in this fashion, let's say the market rejected here and you decide to take a trade, just like most traders do, break and retest of that monthly zone, and you start aiming, maybe take 1:3. Don't be surprised that this trade will not get. It's not going to get to that zone. I'm not putting it out here as a promise, but most times once you trade against the flow of the river, you get drowned. And that's not what I want for you guys on this channel. I want you guys to learn how to trade the best way, and the only way to do that is to always follow the flow of the river. Always follow the flow of the river. So currently, Euro USD, although it's rejecting on the weekly time frame, I'm not eager to start taking sales to the downside. As a matter of fact, it might just be a Fibonacci play that is happening here. It might just be a fib play. So this is the daily time frame. So so this was so this is my fib. So swing high to swing low. So it might just be that this market wants to reject somewhere around here, and only by next week are we going to see whether that will actually hold true. But if this level doesn't hold, then best believe that this market is going to come to this yellow bar, which is a daily zone. If you want to learn how to plot these daily zones and these monthly zones, which is going to guide you against taking false entries or taking your entries on support on resistance levels, which is not supposed to be so. As Forex traders, you're supposed to know where all those very solid support and resistance level are, and know how to place your trades. So if you want to do this succinctly and cleanly like a good trader, actually I've got a resource for you in the description. So go check it out and learn how to trade the right way. Now that's for Euro USD. The next one is GBP USD. Now GBP USD, let's see what happened weekly. Now you guys need to see something. In my previous videos, if you go through my previous video, you'll find out why I chose to use a line here. So our key levels are not lines, they're actually zones. But in this case, I just chose to use a line here, designating that whenever price comes to touch around this level, we're going to be cautious. I'm not taking trades off that level actually, but I know that price is going to come back and retest that level and react around it. And the reason is because previously we had a head and shoulder pattern that formed on the weekly time frame for GBP USD. We saw GBP USD to the downside, like you can see here. But GBP has come up, and currently now we are bullish. There's no jokes about that. We are actually bullish on GBP USD. But GBP USD came here for the first time and rejected the weekly level, which is the neckline of that head and shoulder, and also came and gave us profits for the next trade, which hits that same level. Now you can see now that as GBP USD, I'll just go over to a daily time frame. So as you can see now, as GBP USD hits the daily time frame profits at that weekly zone, it rejected to the downside. Now traders will not know why this is happening. As a matter of fact, what traders do when they come to a chart like this, and okay, probably they have been in a trend to the upside, and all of a sudden the market gets to this position right about here and starts rejecting or starts misbehaving. Traders be worried. What is happening around here? I mean, if I just take out this black line for a second, you'll be asking yourself, what is happening around here? This level hasn't even gotten up to, this particular level has not gotten up to this level right about here, which is most times where traders aim for in their take profit. So you see where scenarios where traders take trades and it doesn't get to their take profit. As a matter of fact, it gives them a lot of pips close to their take profit and the market turns around. So this is that kind of scenario. It happened to me several times, guys. Like when I was trying to get better as a trader, I lost a lot of accounts. I blew a lot of accounts. I lost a lot of trades. And I did document some of them here on this channel. You can go and watch some of them. But I've come to the point where I know exactly what the market is doing and know how to stay away and know where to take my profits. So all this comes with experience. And in this case, I know exactly. I told everyone in my previous video that watch out for that black line. That black line is the neckline of a previous weekly level. Is the neckline of a previous head and shoulder that formed a weekly chart, and immediately price got to that zone right about here. So I'm just going to take it back now. So immediately price got to that zone right about there. It started to reject to the downside, and traders that didn't want to lock in their profits must have been stopped out in this trade. And that's not what I want for you guys. I want you guys to be able to see these things. Like these things are pretty much basic, but they're not basic to people or traders that don't know how to identify them. So these things are basic, and they are what helps traders to actually make money once you know how to plot them correctly. And once again, the resource I'm talking about, guys, to help you guys do this, because key levels are very important. Like they are like the basic part of forex trading. They're like the foundation that you build on to make you a better trader. And if you don't get it right, if you don't get that very foundation right of knowing how to plot your key levels, i.e. that's your support and resistance zone, your supply and demand areas, if you don't know how to plot it accurately, you're going to get most of your trades messed up. And I don't want that for you. So in order to prevent that, I've got this resource for you guys at the description of this video. Is actually a course that is going to help you guys grow and get better as a forex trader. Actually, not every forex trader knows how to come to the chart and dissect the charts to know exactly what the market is going to do. I mean, I've come to a stage where I can see what's happening in the market now and just stay aside. I'm not a guru, but out of blown accounts, out of the whole experiences I've gotten so far in this my 4 years of trading, I've come to understand the market and know when to trade and know when not to trade. And now I have understood that the market reacts around certain levels. Now I've understood that certain type of setups do not actually play out eventually to take profits. I know how to stay off. Most traders don't know that, and that's what I'm here to do. If you're really serious in growing yourself as a forex trader, then make sure you do not miss out on that resource. Join the course and learn how to trade the right way. So this is GBP USD. It's rejected now to the downside. What do we have waiting for GBP USD now? So quickly, let's look Let's go back to the weekly time frame for GBP USD. Now, GBP USD forming this week right about here means that we just have to wait, because you see the rejection here shows that there is so much bearish rejection from that zone. We just have to wait. And the reason why we need to wait and not hop to the downside or hop on a selling trade is because we are still, just like Euro USD, we will be going against the flow of the river. We will be going against the flow of the river because the overall bias for GBP USD now is bullish. We are now bullish on GBP USD, and as we come to the monthly time frame, just like you can see here, you can see that this trend line was taking off. So when GBP USD broke this trend line right about here, broke it, retested it, and came to the upside, we became bullish instantly on GBP USD. So now GBP USD has met a major resistance. Actually, the neckline of the head and shoulder that saw GBP USD previously to the downside, it counts as a major level. Now GBP USD has hit that level and there's a rejection from there. We need to be cautious. We need to be cautious because how trading actually works is that we trade from zone to zones. The market moves from zone to zone, and if there is anything in between that can affect your trades or affect your movement from one zone to the other, you need to be cautious of it. And that's what the price action quick start, which is the course I'm telling you about, that's what the quick start teaches you how to do. Teaches you how to spot these levels, teaches you how to position yourself, teaches you how to place your trades, know where to place your trades, know how to enter the market, exactly where exactly to enter the market, place your stops, and then place your take profits. It will also tell you as a trader to know when to add positions and when not to add positions. It will tell you how to apply risk management. I mean, I talked about risk management in depth in the course. I literally poured out all my experience into that course in order to take you by the hand from the level of a novice to actually the level of trading profitably, and it's going to cut your learning curve in half. So in order to do that the right way, grab yourself the course and learn how to trade like this. So now we have seen what's happening here. I'll just wait for GBP USD, guys. I'll wait for GBP USD to give me a nudge as to what it wants to do. So what I'll be waiting now is I'll be waiting for a good rejection of this zone. So we are now, so I'll just go over to the daily time frame. Now we have gone below this. You can see that the daily candle has broken below this, and then we are trying to, we're just reacting around. We're not really moving there. All I want for GBP USD to do, guys, is to come back above this zone, hold on this zone, price action, and then we will take it up to the upside, back to this zone. And if eventually we do break above this zone, guys, best believe that the next point for GBP USD will be here. And that is how I want to trade GBP USD. It's not time to reverse this trade, because there are certain things you look at in a chart to know that a particular or a prevailing trend is about to reverse. If you don't see those things, there are certain time frames you look at to point them out. If you don't see those signs, you should not flip your bias. So now I've not seen such signs. So actually those signs are chart patterns. I've not seen a chart pattern. I've not seen a double top. I've not seen a double bottom. I've not seen a head and shoulder. I've not seen an inverse head and shoulder. So in this case, we're looking for a bearish reversal pattern like a double top or a head and shoulder. I'm not seeing that here. As a matter of fact, I'm seeing something else that looks like this market. GBP USD will want to fly to the upside, but we're waiting for it to actually hold. And that's right here. So I'm just going to draw I'm seeing something that looks like an inverse head and shoulder. And you guys know that inverse head and shoulder is a cue that the market actually wants to fly to the upside. So given that this is an inverse head and shoulder, with this being the left shoulder, the head, and the right shoulder, all I want, guys, is for the neckline, which is what is here. All I want is for the neckline right about here to be taken off. So I'm going to take this off now. So scratch that. All I'm waiting for, guys, is for GBP USD to actually stay above. Take this one off. For GBP USD to come back to convincingly show me that it wants to, or it's ready to trade above this zone. If GBP USD comes above this zone and retest this zone, then I'll be ready to take it to the upside. So I don't take my trades on the daily time frame. I take my trades on the 4-hour time frame. My entries are taken on the 4-hour time frame. So definitely, best believe that we'll find an entry. So that's it on GBP USD. The next pair on our watch list is gold. What's gold doing? Gold has been all-time bullish, guys. Like, look at this erection of candles. I mean, gold is so steeply bullish, and whenever gold is like, if you are not in the trade of gold, don't try to force trades on gold. I'm just going to be very, very frank with you on this. Don't try to force trades on gold, because the weekly is saying up, the monthly is saying up, and the daily, we have come over to the daily now. I did set a target for gold right about here, and it's been hit. So this green bar which you see here was my target for gold when it broke above this range. So this range began, on April this year, and we had the first rejection here, second rejection, third rejection, fourth rejection. I knew that this level is going to hold a lot. Now, when we did break above this level, see the way gold massively spiked to the upside, and that's what ranges do. Whenever the market has been in a range for a while and has tested the upper limits or the lower limits of the range and eventually breaks out of it, the momentum is steep. So that's just what has happened on gold now. And trying to jump into a trade now and not really after the break. Most times we don't enter after the break. I don't even enter after the break of a range. I wait for a test. So, but most times, if you don't enter after the break, do not enter once the market has gone so high or so low, as the case may be. So don't try to take trades here, because this market is too steep. And when you start taking trades that the market is steep, you are practically exposing your account, your capital for disaster. That's just what it means. So all I need gold to do, guys, now is this. I just need gold to come back and give me structure, some form of structure. So we predicted that gold was going to get to this green line. It got there and it blew past it. Come back and give me structure, a form of retest, a form of pullback. So so the first pullback was here, but we didn't get a very accurate pullback to continue to the upside. So gold is too steep, like you can see here. I need structure on gold, so I need gold to actually come back. Gold is currently trading at $3,779 per ounce, and we need it to come back and give us structure in order to know exactly where it wants to trade. So how many touches of the trend line has happened here for gold? So if we look here, so this were in the weekly time frame. So this is the first touch here. So this was the first touch of the trend line. So this was the first touch of the trend line, and we have the second touch of the trend line right here. So ideally, if gold were to continue this move to the upside, we are waiting for a third touch. Whenever that third touch comes, that is when I'll be ready to continue with gold trades to the upside. But because that has not happened and no form of pullbacks have happened, I'll be staying off gold for now. So simply, that's gold. The next one is Bitcoin. I was actually waiting for a Bitcoin opportunity yesterday. I made a video yesterday, or 2 days ago rather, about Bitcoin holding at a level before I'll continue to the upside. You see, that's why it pays to trade with clarity. Guys, do you see my chart? Do you see anything like indicators? I don't trade with indicators. Indicators lag. Indicators lag, and when it lags, it means that you are behind, and it's going to make you to be taking late trades or late entries and get your trades stopped out most of the time. I came on here and told you guys that a particular entry criteria needs to be met for me to take this trade. Did it happen? No. See my trend line. Actually, this was where my trend line was. So this was a trend line. You can see that the market came here, didn't give us a 4-hour close above this trend line, this counter trend line rather. I actually simulated that this is how I'm going to position myself for this trade. But because it did not do that, I call this trade null and void. I didn't enter into this trade, and that's just what the market does. So some people will be asking, how do I know that this market actually needs to break this counter trend line before it actually goes to your take profit? That's what this helmet, I call it a helmet. If you don't know how to trade and make entries that are in line with what the market wants to do, you get your trades, stopped out most of the time. And the first principle of entering trades is to ensure that a particular structure has been broken. In this case, a trend line or counter trend line. The market is trading above a zone, and it's all in context with the overall trend. So when you are applying all these principles, make sure it's in context with the overall trend. So in this case, I was just waiting for the market to break above this counter trend line. It didn't do that, so I called this trade null and void. I didn't enter into this trade, and you can see that after it didn't break above it, it's weeded out a lot of traders that must have taken their trades just going. If they saw that the market has broken above this zone, you see them making entries. It stopped all of them out. So currently now, what's Bitcoin going to do? I'm just going to take off this counter trend line now because it didn't play out. wait for the next trading setup for Bitcoin. So what's Bitcoin up to now, guys? So just take all these things out. So all I'm seeing now, because everything goes according to plan, if this happens, let's see whether we have a fib play. So we're having a fib play. The market actually came and retested this fib. That's why I was actually waiting for a trading opportunity, but it didn't give it. So I'm just going to wait. If the market still holds around this 50 fib area, which is a very iconic zone for continued trend trading, if this zone holds and the market comes back to break above this zone, like I spelled out initially, then I will be willing to take more trades for Bitcoin. Now, if this zone doesn't hold, it's going to come here next, which is the daily zone below. So the market is going to do one of those two things. It's going to actually want to head to this zone, like it's about doing that, head to the next zone, or hold around there and then reverse to the upside. So if it reverses to the upside and trades comes above here to trade, and then gives us a trading opportunity, then we'll enter. Simple. So that's about Bitcoin. And I'm not looking to flip my bias now on Bitcoin, because Bitcoin, although we are at take profit levels, I'm going to be serious with you guys, we are actually at take profit levels for Bitcoin. We are at liquidation levels, because Bitcoin has been steeply bullish somehow as well, just like gold. It's been bullish, it's not giving us clear pullbacks. So it's going to be that if we get a trading opportunity to the upside, I'm going to jump on it. But if we don't, and the market eventually comes to break below this level, and then comes to break below this zone as well, just know that Bitcoin will be reversed, and that will be a time to sell Bitcoin. For now, I'm still bullish on Bitcoin, but we've not gotten our setup for now. So let's go over to the next one. Oil. Now, this is going to show you guys why I stress so much on having your key zones plotted out well and knowing how to trade off these key zones. So this is oil now, and oil is bearish, and we came here and we were anticipating a trade to the downside, like so. So I did predict that oil was going to fall from $65 a barrel to $55 a barrel. It actually fell from 65 to 62 and then retraced to the upside. So there were trades right about here. So you can see that our counter trend was drawn. So we took our trades right from here and to the downside here. So this was how we positioned for this trade. So, and we put our take profit here. So we got our first take profit level, and the market began to react around this region. Now, why is the market reacting around this region? This is what I call a very strong daily zone that is going to mature into a weekly zone, also known as the 100% retracement. You can see that the market came here. I didn't take more trades. Actually, I've closed out a major portion of my profits, and I moved my stop loss to break even. That is how to go about risk management. Now the market retested this zone several times. What was I waiting for? I was just waiting for a clean break below this zone. So when the market came here, I was just waiting for a clean break below this zone and then a retest. I'll take this trade to the downside, and definitely the market will have eventually gotten to $55 a barrel like I predicted. But it's one thing to predict, it's one thing to trade what you see on the chart. So I've predicted that oil is going to fall, but there was a very, very serious zone that oil was battling with. And as a trader, as a swing and service swing trader at that, I was able to identify this level and didn't trade anymore off it. So I was just waiting for the market to break below. How many traders will see this and hold their patience? Like, let your account breathe and allow the market to do its thing and give you the inkling or the nudge to enter for more trades. I'm at a stage whereby I only trade what I see, and if the market tells me that this is what it wants to do, I wait for it to give me that setup. If that setup comes, I enter. As simple as that. Now, you can see that oil reacted several times around here. So this is the first reaction, second reaction, third reaction, fourth reaction, fifth reaction, 6 times. Oil reacted off this level 6 times and then decided to shoot back to the upside. So that's just to show you that your key levels need to be drawn accurately so that you can be able to take trades, like a real professional. Now, what does it hold for oil? Does my prediction still stand for oil? Now, oil has reacted and gone back. All I'll be doing, guys, like, I'm not going to be kidding you, so I'll just go to the weekly time frame to see. So you can see that we had I tried to do it there. We had a, what do we call this, guys? This is an evening star pattern. So this is an evening star pattern. We had an evening star pattern form here, and I was waiting for a break below it, but it did not break below it. As simple as that. So what am I waiting for oil now? Simple. If oil stays at this zone right on the weekly time frame and gives us a weekly bearish rejection, I will just scale down to the lower time frames to see whether I now get my setup. Now, I'm not seeing that weekly rejection there, so I'm not going to be too much interested in trading oil to the downside anymore until it tells me it's ready to go. And that's oil for now. The next one I'm going to be talking about now is GBP JPY. Now, GBP JPY is the same thing. GBP JPY is bullish, and as you can see, guys, I have already simulated it in the past that I need GBP JPY to break above this zone. Did it do that? It did come here. It did come here and break above the zone, but it didn't give us an opportunity to trade, and it broke below again. So GBP JPY just playing around this zone, and that's to show that this zone is strong. I mean, there are a lot of strong zones now across different currency pairs, and if you are not monitoring these zones, you get yourself into a lot of trouble. You get yourself into issues. So it still stands. So I'm just going to take this simulation to right about here. I need GBP JPY to actually, like, it's broken above it now. I need it to hold. I need to hold and give us a setup. Once that setup comes, I'll enter into this trade. But for now, I'm not taking any trades on GBP JPY. So I'll actually be keeping a keen eye on GBP JPY to see whether I get more trading opportunities. S&P 500 has been going up to the upside, and just now that it's about rejecting, I need a real rejection because S&P 500 is steep. It's steep just like gold and Bitcoin. So I don't like trading steep markets like this. I need the market to give me structure in a way. See what I want S&P 500 to do. You see how steep S&P 500 was flowing all these places. You can see how it flew, and flew all the way to the upside, and then decided to give us structure. I need that form of structure in a way for S&P 500. I need that structure to come so that I can be able to take trades to the upside. Understand? Now S&P 500 has not done that, and I'm not willing to take more trades for S&P 500. As simple as that, until it gives me structure. ADCHF is not my favorite pair now. It's not just ready to give me a clean setup. So I'll just leave ADCHF. Wow. Our trade for GBPNZD has played out. So we actually have a serious trade going on in GBPNZD. Let me open my paper trading account. Trading panel. Yep. So should have a paper trading. Yeah. You can see we have about $9.1 million floating for GBPNZD. So we have an equity of 163 million. So the account side, this account started at 150 million. Now its equity is currently running at plus $13 million profits. Now GBPNZD, why I'm showing you guys this, because this is my paper trading account. I'm showing you guys this to show you that we are actually following a system of growing this. Now we have grown this account to up to 13 million plus 13 million, and that's the trade that is really hitting hard to give us this profit is GBPNZD. And that's why I've looked at this and seen that we have actually gotten to one of our trades, and I wasn't even paying attention to this. So just now I'm opening the charts now to see that we hopped on this trade. So this is like an addition to the previous trade I took. Now I just added more positions to this, and the market is running much in my favor. So now the market has actually gotten to this level. So this was the previous high it made here. All I'll do is to mark here, guys. So that's why I tell you guys, mark here as what? A resistance level. Now this is a daily resistance. All I need is for the market to break above it, and then where will be our next point? Our next point will be this point. Simple. We trade from zone to zone. So if the momentum, the bullish momentum continues for GBPNZD, I'll be ready to take more trades to the upside, but be very careful with this level, guys. Like I told you, the 100% retracement is not something you want to play with. Be careful with this level. And that is GBPNZ. I'm actually very happy, and I'll go back and close out more positions on this trade and move my stop loss to break even after this video. Now USDCHF is the last on our watch list. So I did show you guys the trade in the last video I made. I showed you guys the trade I took on USDCHF, which ran alongside GBP USD. So I didn't take the GBP USD trade. I actually took the USDCHF trade, and it gave me these massive profits. Now it's gotten to this same level, just like I've pointed in GBPNZD. When the market trades and gives you your take profits at that same level using the counter trend line break strategy, once it gives you your profits, all you need to do is to line up this place quickly. Line up this place just like I've done for GBPNZD, and mark here as your 100% retracement, and wait for the market This thing is repeatable, guys. To show you guys that this market knows what it's doing, it's repeatable. I showed it to you on the oil trade. I was waiting for the market to break below that zone. Did it? No, it reacted about 6 times on that zone before it went back up. So if you are not seeing this zone and you are not expecting these zones, you are going to get yourself messed up with all your trades. Now, it's just about happening for the GBPNZD. I've marked it out as that zone. I'm waiting for the market to break above it. Now, we have come to USDCHF. You can see that as I've marked it out here, what the market do? It didn't break below it. You will see it as a break here, but you can see that the next candle was a pullback straight up. So breaking below if and not giving us a setup is still counted as no setup. Now it's put back all the way to the upside. So what am I expecting for USDCHF now? So I'm just going to take off all these things. So USDCHF has come here and didn't break below this zone. All I'll be waiting for, guys, is I'm just going to quickly go to the weekly time frame because we are all-time bearish on USDCHF. There's no doubt about that. Now you can see that on the weekly time frame, this is where, guys, listen, so you know how to know when trends are about changing. I told you that there are particular time frames you look out for trend reversals, and there are certain things you look out for. In this case, chart patterns. Now we have seen that. I'm just going to take this out as well. You've seen that on this same zone, which I marked out as 100% retracement, on the weekly time frame, it's actually trying to form a chart pattern. And what's that chart pattern? This is a double bottom, guys. This is a double bottom. So the market is forming a double bottom right about there. And what's a double bottom? A double bottom is a bullish reversal pattern. So the market is about flying back to the upside, and every chart pattern has what? Its neckline. So in this case, where's the neckline? Simple. I'm going to draw it. So simply, I'm going to draw this as the neckline. So this is the neckline, and then I'll just take this one off as well. So this is the neckline of this, and since it's the weekly time frame that we are spotting it, we have a color code for our zones. So I'm just waiting. If USDCHF has formed this and comes to eventually, because we wait for the chart patterns to actually break, it comes to eventually break above this neckline and then retest it and gives us our setup, guys, just know that this entire trade, at least for now, for USDCHF has been bearish for a while, as spelled by the high time frames. But if this happens, I'm going to be ready to take trades to the upside. So this is one of those scenarios where, although the overall time frame says that we are bearish, so you can see that we have this bearish trend line in place on the monthly time frame. It means that the market is bearish, no doubt about that. But when you see chart patterns on the weekly time frame, so I'm giving you guys, I'm letting the cards out of the bag now, guys. If you see bearish chart patterns on the weekly time frame, so if the chart pattern holds and gives us our setup, I'm ready to take this trade back to the upside. And how are we going to position for this trade? So if I go over to the 4-hour time frame, because that's where I usually take my trades. So I'm just going to take this out. So all I'm waiting for, guys, is for a break. I need the market to continue its movement and eventually come and break this zone and gives us a setup. I'm going to take this trade back to this zone. So how we line up, however we line up, just know that we are going to have about, let's see, close to 300 pips to catch on USDCHF, and that's a lot of pips to catch on USDCHF. Now, if that happens, I will update you guys. For now, we are still, the chart pattern is still forming, and it's not happened yet. I mean, it's been good making this analysis so you guys can see exactly what's happening in the market and know how to position yourself for next week. So we are having some kind of setups emerge, but it might happen next week, it might not happen next week. But that's the joy of trading as a swing trader, because you don't get to stay at your chart all the time. You get to see the market for what it's actually doing and know how to plan and enter into your trades. And simple as that. Get yourself ready for next week's edition by going through this video, because I know that this video is going to be very enlightening and educational. But if you want more, like I've said, once again, go and grab the Paris Action Quick Start right at the end of this video. The link is at the description of this video, and learn how to trade the right way. So see you guys.